Hey, what's up, good people? How you doing? I'm gonna try not to talk too loud. I'm actually at the airport, but I've been watching the market from the plane, and retail is tanking. The S&P has dipped into bear territory, or crash territory. It's down by 20%, and at the time of seeing this, I'm shooting this before closing bell, so it may, dip back higher. But as we can see, that the elevator just keeps going down. It's not coming up. And just when you thought it was the bottom, there's a new bottom. So that's why we're doing what we're doing, good people. We're just pumping the brakes right now. We are just pumping the brakes right now. Inflation. Now, here's the thing about retail. Retail is cooling off, and actually that's good for inflation. So people are, the Rosses and all of the retail, the Targets, and where we spend our money, we're not spending anymore, right? Now, that's not good necessarily for retail, but what happens is it's another thing that combats inflation, because if there's no demand, so that we have limited supply, and when the demand goes down, that helps to curtail inflation, along with the Feds raising interest rates, right? Stock Curry and myself told you guys what's happening with the housing market. We painted a clear picture, though a lot of realtors are going to be saying everything's green and rosy. It's not. It's next. And you'll also start to see job loss. Right now, we know we got over 11 million unfilled jobs, but that's going to start turning over the next 12 to 18 months. So keep your eye on the housing market. So these are all of the things that we're keeping our eye on. But I'm going to be talking to you guys down the road about not tapping out. Okay, now anything I say is not a suggestion for you to buy, hold, or sell, right? And hey, I know I didn't ask, but if you guys would please go ahead and hit the like button for me right now, that'd be great. And if you have not subscribed, go ahead and subscribe. But what I want to tell you is that I have some stock that I'm red in. I have some stock that I'm underwater in, and I'm not selling out. I'm not telling you not to sell out. I'm telling you that I'm not selling out, because they're not hype stock. These are good, solid companies that just get caught in a downturn. Now, what do I need? Time. I don't need any more money. I just need time. I just need not to look at it every day while the elevator is going down and psychologically start telling myself how much money I'm losing, when all I need is time to wait it out. Now, the same thing does not apply for a lot of hype stock. The same thing does not apply for stock that had extremely rich price to earnings, extremely rich multiples. And so you have to go into your individual portfolios, because one size does not fit all. And you have to see, are you loaded? Are you balanced? Do you just have hype stock? Do you just have meme stock? Do you just have potential short squeeze stock? And if you do, then you're in greater trouble. But if you have a balanced portfolio, if over 80% of your portfolio are in solid companies, right, that are going to be around, and you guys know what those companies are by now. You've heard it, the Microsoft, the Googles of the world, the Apples of the world, though they're coming down. Even something like Dollar Tree, it's a solid company. It's not going anywhere, right? Though it's coming down. But these are companies that will turn around, including banks. And so the market is confused right now. Stocks and sectors that should be doing good right now, they're not doing good. They're actually going down. The things that should be going up right now in this environment, they're going down. So we're in this downward spiral And every day, like I said on yesterday, every day is a new bottom. We say, hey, this has got to be the bottom. This has got to be the bottom. Now, there are some stock that are in buy territory, and they have a buy signal on them, but they're still going down. So you say, hey, why would you buy a stock that's going down? Because you got time. No one can time the market. You don't know when it's going to turn around. And so you don't just go in, you just start cutting your money up. And you guys already know what I'm going to say, dollar cost average. Just cut your money up and dollar cost average. Now, if you're looking at your portfolio and you have a lot of stock in there that are good quality companies that have cash, that won't have to borrow in this high inflation environment, you got to think about this. Companies that's got to raise capital, raise cash has a premium on it now that the feds are going up. And that's not good. So you want companies with cash on their balance sheets. You want companies that have cash in the bank, and a lot of them have come down into fair value. And so what do you need at this point? Time. And so you just have to be patient. I have some stock that I was doing some swing trading in, and I got stuck, just like some of you guys got stuck. They were going to be in and out. I was going to be in and out in a week, and then boom, it started bottoming out too fast, too quick. And so am I going to sell out? Nope, not going to sell out. I'm not telling you what to do. I'm telling you I'm not going to sell out, and I'm just going to wait time. And so let me also say this. Even if you got into stocks or company that had high multiples, high PE ratios, and they're coming down and they're never going to get back up to that high that you had it, that you bought it at, some of those stock could come back 10, 20, 30, 40%. So yeah, you won't get back to the let's say you bought a stock and it's come down 75%. It may regain 30%. So if you sell now, then you're leaving money on the table. Now that's not your entire portfolio if you're new. So you have to go through your portfolios, look at each individual stock and see, did I buy this at the top? What's the likelihood of it getting back to the high? Which a lot of them, if you're in a hype stock, they're not. But you also gotta ask yourself, what's the likelihood of them coming back 25, 30, 50% of the highs? Then you have to make that decision, should you keep that stock or not? Let's just keep it real. And remember, this is not one size fit all. So you can't say, hey Larry, what about this stock? What about that stock? What about this stock? I'm not gonna be psychoanalyzing 573,000 people's portfolio. I can't do that. I am not a licensed, that's not my job. That's above my pay grade. Let's just say that. But all I can do is give you clear, solid advice on where the market has been, where it is now, and where it's headed. And we do know that there is a looming recession coming. And yes, we could already be in a recession. But the fact of the matter is, by the time we actually find out we're in a recession, we're already 6 to 7 months into the recession. Okay? So I'm going to make another video on this topic. And that topic is, do you tap out and get out for good? Or do you learn some lessons? I don't care if you've lost 70% of your money. Do you tap out, or have you learned something and you have a greater understanding, and now you have the power and the tools or the knowledge to get back 70% of your money? And it may not be in the same stock. It might be in a different stock. I'm telling you, I've done it. I've lost money in one stock, went to another stock, put fresh powder in, and it gained more than I lost in the previous stock. So what I'm going to tell you is, you can, now that you have some knowledge, you've been trading for a year or two, and you know how the market works, when the market bottoms out, let's just be prepared to make some more money. Don't tap out, because if you tap out, you've lost a lot of money. And so I'm going to continue working to help you guys get some of that money back. Listen, remember, Webull is having their 4th year anniversary right now. Deposit $1 and you can get up to over $12,000. Over $12,000, and the minimum you're going to get is $34 by depositing $1. Do that right now and fund that with a minimum of $1. And then you guys know what we're doing with Moomoo. We're just cashing up. So my link's below. Download that link and deposit $100. And we're cashing up, getting ready for the Great Recession. And the Great Recession is not going to be something that we're going to be negative about. It's going to be something that we're going to be looking forward to, because we're going to truly build generational wealth. So make sure you check both of my links out below. Click them and fund them today. And I'll talk to you guys tomorrow. I'm stuck here in Baltimore for a minute. And I'll catch you guys tomorrow. Live, love, laugh, and learn.